Hey traders, Raghee here, and this is your simpler futures free video. We're going to cover what happened with the Fed. Now, a lot of people like to dismiss the Fed, even be somewhat nonchalant or even derogatory about it, right? As if that somehow minimizes the potential impact they can have on the market or the underlying narrative. So don't dismiss it. That's an easy and lazy thing to do. What you want to do is just stare it down and say, okay, do you impact my world right now? And what is the messaging you're trying to communicate to the market? Because guess what? 2 p.m. really isn't necessarily the day we figure out what they're saying. 2 p.m. today Eastern is when we decide whether or not what we thought and what we expected really is. Okay, that's really the whole buy the rumor, the sell the news conversation. So if we go to FFM, okay, we've been below 99. That's been a major line in the sand. We've been below this 99 level. This is really what's been implying that 70 plus, 80 plus % expectation for a rate hike in June. Has that changed? No, it really hasn't. So, did anything that they said today pop this chart above 99? Again, no, it hasn't. So, am I going to expect that the Fed is going to hike rates in June? Absolutely, they're going to hike rates in June, and that means that we might get a quick little pop in the dollar index, but I'm not expecting that at all. Okay, I'm not expecting DX to pop much more than we've seen, and I actually don't expect us to see anything really much above 98. The next non-farm payroll, if it's good, won't do much more than maybe bump the expectations for June to just kind of a done deal expectation. But what it'll do is we'll start to think about, well, could they do it again in September? Could we see 2, maybe 3 rate hikes if the non-farm payroll allows the FOMC to increase the rate at which they hike rates, right? The trajectory, if you will. Are we talking about 3 rate hikes this year? Only 2? Maybe 4? Right? We don't know. So the non-farm payroll reaction we'll see on June 2 could be one of the reasons the dollar pops, but it's not going to be because of June. It's going to be because of looking out to the FFU contract or the FFZ. So these aren't necessarily trades, but again, what I want to show you is how you can use these charts as a dashboard, as a barometer, as your instrumentation panel to understand what the Fed is actually trying to tell the market, rather than just dismiss Yellen Company and ignore some of the messaging, because there is some interesting messaging. Okay, and the interesting part of it is, are we going to see the euro derail? So that means EC futures or the euro US. We're going to see the euro derail the uptrend? No. In fact, if we do see that rip higher in the dollar, I want to buy euro on a pullback. Okay, another part of the FOMC messaging is the balance sheet that hasn't gone away. I still feel that there's going to be a ceiling between 53 and 54, up to about 56 on US. Now, at these lower levels, I do have a short on just in front of 54, 154. And when the balance sheet becomes part of the conversation, that's going to be pressure on this chart. When the FOMC rate hike, that trajectory might accelerate, that's going to be pressure on this chart. When we see the ECB more formally begin the tapering process, which we could see as early as next month, that's going to put pressure. So I think the narrative, not just near term, but going into the latter half of the year, is very bearish for the 30-year. And I'd like to build that position aggressively around 154 and up to 156. So what's the message of the FOMC? I think we could probably just say we're going to hike rates soon, whatever that might mean. They're not going to light a path and tell us, hey, we're going to hike rates in June, gang. Never will that happen. But I think right now the market says, hey, yeah, is June a done deal? Even a terrible NFP is probably not going to derail it, because they've been willing to hike after disappointing NFPs before. Okay? The other thing that we could take away from this FOMC to dismiss and to those naysayers about June, the FOMC is saying that some of the slowdown we saw was transitory. That's a great word, where we don't think it's going to last long and we're not going to change our mind about rate hikes. That's another part of this conversation. Okay? So let's talk about the equities markets. we are right at the level that we have shorted from before, that area that around 20,995. Am I going to take another short? I actually have taken a short. It's my smallest of the shorts that I've taken so far. It's my fourth short, but I am shorting 20,995 in a very small way. In the premium video, I will talk about how I'm going to manage the way in which we are negotiating that 21,000 area. Okay, ES, very similar conversation. The area between 24 and 25 is the zone. Did I short this? I actually did not. Is it shortable? It is. And in the premium video, I'll walk you through, if you did short this, how you can use what I call a confirmation or guidance trade to monitor how the market's responding to this zone of what I feel is exhaustion. Also, the NK. We've reeled in a little bit. I'd like to see this market rally off the 20-period simple. Not much more to say about that than that. NQ, we've already taken profits in the area between 57.15 to 56.95, and now, like I mentioned, now we go into greedy bastard mode. How high is high? One of the mistakes a lot of traders make is they put in a very ambitious, let's use the word ambitious, initial profit target, and then they take profits off the table too quick. I think we should do it just the opposite way. Be pretty conservative about your first profit target. Move to a break-even stop, and then go into what I endearingly call greedy bastard mode. I'll talk about my next upside target for this gorgeous winner we have in NQ in the premium video. In the meanwhile, I just want to let everybody know we are achingly close. Where's my webpage? There we go. We are achingly close to the formal, the big launch of relaunch. I'm kind of calling it the reboot, Simpler Futures 2.0. So we're going to be doing this, I think June 1st. All right, but you can actually go to the memberships page now, simplerfutures.com/memberships, and you will see the completely revamped offering that we have for Simpler Futures. Okay, the chat room, trade alerts, premium video, which of course we've always had, trading room archive, special reports. This is going to be pretty awesome. Special reports, the learning center, Elliott Wave dispatch, and then yes, I am going to bring over all sorts of currency and Forex goodness over to futures. So I kind of endearingly call this Simpler Futures kind of plus another F, right? It's kind of Simpler Futures plus Forex. All right, can't let go of that Forex. And we will have a currency corner here as well. All right, check it out. Let me know what you think of our new offering. Can't wait to see you inside the members area. Catch you in the next video.